Hey, hi traders, this is Radek Pavlicek and welcome to the new weekly video. I'm glad to be here with you again, and turbulent times bring difficult investments decisions, and that's why I made this video to give you my opinion on what I'm thinking about the fall of SWB and Credit Suisse. In today's video we'll look at the financial sector in general, and it has run into a lot of trouble. I'll also look at the dollar index, US bonds, the S&P 500, German DAX, and finally Bitcoin and USDT.Dominance. So stay tuned, here we go. Before we begin, please read the disclaimer carefully. This video does not lead to recommendations to buy specific titles. It's for only educational purposes. So we start with XLF. Its financial sector. After the Silicon Valley crash, Credit Suisse, the second largest Swiss bank, is in trouble. As you know, the bank's shares are down 30% down after a major Saudi investor ruled out further aid. Overall, the financial sector is in a decline, but it's still healthy correction. I see the maximum decline somewhere towards 27 US dollar towards wave 1. Here it seems wave C of big wave 4. So it's a zigzag formation and should end. Next is USD dollar index, confirmed by the USD dollar index, which may break the resistance of the strong 105 level somewhere here. I changed to 4 hours. So 105 is a strong resistance, and we can complete the C wave. Subsequently, I would watch the Fed rhetoric, definitely, especially how they will proceed with further interest rates hikes, whether it will assess the situation as dangerous, and instead start to gradually slow the pace of rate hikes or even cuts. This would consistent with a scenario where we anticipate a further decline. I changed to daily declines towards 95 levels in higher scale, but for now we still expect liquidity picking up in equities and the dollar strengthening, I hope, towards 108 or 109, somewhere to 61 Fibonacci retracement. Next, bonds. In bonds, investors are starting to realize that Fed could indeed move to easy conditions, and therefore investors are now starting to buy them. To push for wave A, it's confirmed. Primary scenario is 1 to 5, it's confirmed, and wave A finished, wave B finished, and we are in wave C, which is subdivided to 5 wave. 1 to 0 point level is okay. In terms of the yield curve, I will change to USD US 10 yields. I changed the scenario, and I'm now forced to adjust the scenario and assume that investors will expect a slowdown in the pace of interest rate hikes despite the decline in commodity markets. So we start wave 1, could be wave 2, wave 3, wave 4, and wave 5 towards 3%, and then we can continue up. Okay, this would be confirmed by the HYG index, which is high yield corporate bond. That is strong support, maybe some here in 7.1 level. As we discussed in the last video, I think there could be buying pressure and buying interest at current levels in near 7.1, 770 to 7.1. In long scenario, we are still, I hope we are still in triangle. Next is S&P 500. I change to 4 hours. S&P 500 US S&P 500 is completed wave C of wave 2, or in alternative scenario is wave B. That could be a bit deeper, about 70% or 61 to 70% maybe. So I would be cautious with buying for now, but buying around 36.50 to 3700 points seems interesting to me, which confirms German DAX. In German DAX we confirm 5-way structure upside. We are in correction now in wave 2. We have completed the primary trend, but trend may change, and the banking crisis transmitted to Europe has started to pull European titles down. The index has entered correction wave 2 somewhere 1350 maybe. 6.1 retracement, where that could be 50% or 61% support, and also complete wave C or wave 2 or alternative wave B, but I do not expect wave B, I expect more wave 2. So in alternative scenario could be triangle, maybe something like this, triangle. So which this is wave A, wave 2, wave A, wave B, wave C, wave D, wave E, and pull up, rapidly pull up, but now I expect wave 2. The last is Bitcoin, and on Bitcoin we have seen primary 5-way structure direction, and we have seen an overflow of money from the dollar following the fall of USDC stablecoin. Another interesting aspect followed Bitcoin after some people stopped trusting the banking system, so Bitcoin rose significantly in response. But now I expect a wave 2 or wave B, somewhere near 1850 maybe. From that level we could bounce to at least 40k level in long term, or in new all-time high, but minimum is 40k level. If we break 15k level on Bitcoin, that would mean that wave 4 in daily basis is here, 1535, and we can occur near 12k level. It's minimum for me. Why I'm speaking about that? Because USDT.Dominance has not finished yet, wave 5 up. I'm a little skeptical for one reason. Tether dominance did see a drop after the USDC crash. However, eventually reserve will be straighten it out and everything continues to work without issue. However, this cannot be said for a system that is going through a correction, for swords and cryptocurrencies may take it away as well. I expect that following the rise of the dollar tether and its dominance could also rise towards wave 5 somewhere here, which could see new highs and completion of wave 5, maybe ending diagonal, maybe a little lower, maybe something like this. But I still think USDT will continue in upside. This would mean Bitcoin's value would fall below new lows, but primary scenario is still valid, and it's above low, and this is primary upside direction. So minimum is 40k level. So the important thing will be the pace in the coming days, not so much the movement. So have a great day, traders, stay tuned, and I will be happy to next video next week. Thank you, yours Fredrik.